Hello guys, welcome back to HumbleFx. Today we are discussing a strategy I titled the sniper strategy, best of all. Alright, so before we proceed in this strategy, if you are new to this channel, kindly hit the bell subscription, the notification button in this channel. Click on the subscribe button right here, and you're subscribed. Click on the bell notification, and you get and click on the all, so that you get notified on all the video we will upload in this video. You can check out the videos on this channel and watch more of it, so you get one or two strategy to trade up with in your own leisure time. Okay, you see the trade I just enter this trade, though it's not a perfect entry, but I just want to make some profit with this setting up like this. Okay, it is awesome. And now we are currently on a giveaway of indicators. If you want to get a free indicator from us, maybe you want to get a system indicator, then you can join the group using the link in the video description and start to share the video in this channel. Copy the link in the video in these videos, copy the link of this video and other videos in the channel, and share them to Facebook groups, WhatsApp, Telegram, and many other places. Okay, and once we hit a 500 subscribers in this channel, you are going to get a free indicator that costs more than $100. You just want you to start making money in this market. Okay, now let's get to our business today. We want to discuss about a strategy I titled the sniper strategy. The sniper strategy. Listen and get how this thing works perfectly and apply it on your demo account first of all. Right now, this is the strategy. We'll talk about how it works first, then we'll give you the settings. Now, first of all, the zoom level. I get these questions easily and all the time, but today I want to limit the question. The zoom level for this strategy is from the lowest zoom level, that is zoom in completely, then you zoom out. 1, 2, 3. So that's the zoom level. You zoom out you zoom in completely, then you zoom out 3 times, and this is your zoom level. Now, what we have on the main chart, what we have on the main chart is the Bollinger Band. Okay, that is the setup. Then the main chart, we have the RSI, the MACD, and the moving averages. What we have here, the red one here is the red line in this place is the moving average, and the blue line here is the MACD. Then our RSI is 90 and 8.14. Don't worry, I'll give you the setup once at the end of this video. We'll give you the setup. If not in this video, you get it on the but I'll give you the setup. Okay, just come. Now, how does it work? It works on the crossover strategy. Okay, first of all, we have to look out for the Bollinger Band in the main chart. All right, so when the Bollinger Band, when the market, this is crash 500, so we are buying it. When the Bollinger Band, the market comes down to the lower Bollinger Band, it comes down to the lower Bollinger Band, and this red line, which is the moving average, and the blue line, which is the MACD, they are crossing each other at the oversold level, which is 8.14. The oversold level, we are supposed to enter the trade, and we enter it, we take it for some time. You can try to take about 4 candles, 3 to 4 candles. This is, remember, each of these candles is 5-minute candles. So if you're taking 4 candles here, you're taking 20-minute candles. If you're taking 3 candles, you're taking 10 to 15-minute candles. All right, so but I would advise you, because you want to reduce the risk of your trade, you can enter it and take 3 candles, and you go away. Okay, or you set your take profit at the nearest resistance level. Okay, you see at this point here where my black line is, that is my resistance level that I should take my profit. I can enter this market right from the beginning of this trend here and take profit at this point. You can see I got my take profit before a spike happened. All right, so you want to enter once there is a crossover right here in the 5 minute time frame, you can enter your market and take few candles. All right, remember one candle here is 5 minutes, so you are staying for a bit longer than other ones we have been telling you about. So once there's a crossover here, you enter the market and take your candles, and you see again, and that some stuff happened here. There is a crossover right here. The red line is crossing, and the red and the blue line are crossing over. And look, the market is already at the lower Bollinger Band. It's already lower in the Bollinger Band. So we have a confluence. We enter this market as well from here. That's why I call it the sniper, because we enter it at the earliest stage, and we ride it to get our profit. You could have entered and take your profit at the nearest resistance level. Okay, you could have entered and take your profit right here. All right, this is actually, these are at least, you should have gotten up to 3 candles from that point. Maybe you entered here and gotten 1 2 3 4 candles. Is not, that is 20-minute candles. It's not so simple, it's not so small. All right, and this thing happens all the time. Look at something that happened here. Actually, this thing happened here. Actually, you see the market is already at the lower Bollinger Band right here. Even though we do not see it because of the zoom level we used, it's not actually, it is near the lower Bollinger Band, but where the actual cross happened is at this point. Okay, that's where the actual cross happened. It's already below the lower Bollinger Band. So, and the red and the blue line, they are already crossing over right here. They are already crossing over. So when they cross over like this, I will enter my trade here, and my take profit should be in the nearest resistance level, which is somewhere. I can choose to take my profits at this level, at the sniper, but because I want to reduce the risk involved, I could actually say, let me take profits right here. It's not too bad. I can decide to leave it and watch it and take profit at any moment as I want to take profit. Okay, so this is how we trade it. And once this is a spike happens on you, but the spike have not reached the oversold level, I can still hold my trade, because I will check on the 15 minutes time frame. If the spike happened on me on the 5 minute time frame while I'm still on a trade, I will check on the 15-minute time frame to see what is happening there. From here, I will also see that a cross has happened, is also at an oversold level, and a cross has happened between the two lines here, which means it is going to go up for a while. Even though there is a spike that happened, I will see this cross must be valid. This cross must be valid. So I will have to wait, hold the trade up to my take profit or to get more profit. All right, so 5 minutes is where you take your trade, and if anything happens while you are in the trade, you can check back on the higher time frame to see if you are to hold the trade or exit in a little profit. All right, now, like right now, there is a crossover that we enter the trade here, and the spike happened to us right here, because already there's a cross here, and there's no cross at the upper side. Already I can hold this trade upper, because there's no cross at the upper side, only the downside has had a cross. I could hold this trade longer to take my profit. If my take profit should be somewhere here, assuming I didn't get my take profit before this spike happened to me, or something somewhere here, I could still hold my trade to take my profit easily without being afraid of loss. Okay, now let's check boom 500, boom 1000. This thing works perfectly. I just talked about crash 1000, so let's talk about boom 500 right now. You see this market here, I enter this market, but it's go against me. Why? Because I did not, is not a perfect entry. Look at, there's a cross below right here, and already is not, there's no cross at the upper side. Look at that. This is why you need to be very careful. You need to watch out. There is no cross at the upper side. Look it out. A cross happened at the below, which means the market is going to buy. This is about 500. It's going to buy. This is 5 minutes as well. and the market has not reached the overbought level so I can sell, like it happened right here. There's a crossover here, and even though there are spikes along the way, it did not affect my trade. Even though I entered somewhere here and the spike was happening along the way, it did not affect my take profit. But at this point, it has not hit the oversold level in the 5-minute time frame, so I'm not supposed to buy. And again, the market has not reached the upper Bollinger Band in the main chart, so I'm not supposed to buy this market. But I just entered it to take some pips, which is not advisable. Even though I'm not afraid of this market, I know it will come back to profit, but that's not the principle of this strategy. All right, now for me to know if I should hold this trade or exit it now in loss, I will still check on the higher time frame. And at this point, the market is actually at the already reached that upper Bollinger Band, and there's a crossover here, and it has not come down to the oversold level. So this market is, I'm going to hold it to at least give me some profit. I know it has gone against me so big, but I'm holding it for a profit, okay, because of what I saw in the higher time frame. All right, so but it's not good for you to trade something like this, because it is risky. It is risky it is risky It's better for you to wait for a better setup, so that somewhere here, look at the setup right here. Look at the setup that appeared here. There's a cross right here in the 5-minute time frame. You could actually enter here and take profit at the nearest support level. This is support level. I will take profit. I will take my profits here. I don't want to give myself problem, so I'll take profit here, which is already taken out, and still go down, but I'll take my profit right there or here, either TP1, TP2. Very simple as that. Okay, and this setup comes up most time. Look at another setup here. There's a crossover in this place, and it is already hit the upper Bollinger Band. I should enter this trade and take my profit, okay, on the nearest support level, which should be here. But like I said, actually it give me profit. It take me out in profit, because but I will not allow you to do this. You can make your money stay for you by taking profit before the resistance, so that you don't lose money. Okay, but while doing this strategy, don't use high lot size. Use lower lot size. If you are trading boom and crash and you have a low account of $10, $20, just open a trade with lot 0.1. How do you do that? You open a trade with lot 0.1. It is okay, so that you don't lose money if it goes against you. All right, so this is very simple and easy. Already we have taken much time in this video, so I will have to skip the setting right now. By the next, I will upload a video of the setting in the next video. Maybe tomorrow I will do a short video and upload it for you guys, the setup of this strategy. Remember, this is the sniper strategy. Okay, now for you to get the these things right, you have to be patient enough. It happens many times. Look at it here. When it's crossed at the overbought level, you can take your trade, and that trade should come up here. All right, this is HumbleFx signing out. Remember to come back tomorrow to get the setup of this strategy. It is very awesome. All right, thank you so much, and remain blessed.